Innovations Private Limited is a Pune-based company specializing in eco-friendly packaging solutions. As of financial year ending March 2025, the company had an investment in the plant and machinery of rupees 8 crore and annual turnover of rupees 42 crore, comfortably placing it in the small enterprise category under the old 2020 rules. So the small category, the small enterprise category, more or less, when you talk about within 10 crore is your investment, within 50 crore is your turnover, you are well placed in the small enterprise category. Now, with the new MSME classification coming into effect on 1st April 2025, the CEO, Mr. Arjun, planned a major expansion. So, expansion has been planned for Indus Innovations Private Limited. By July 2025, the company invested an additional 15 crore in the automated machinery to meet the export demands. So, export demands will be met via the additional, you can say, amount which has been infused. For the financial year 25-26, the company projected its annual turnover to reach rupees 95 crore. Mr. Arjun is concerned that this growth might push them into medium category, causing them to lose certain subsidies and interest subvention benefits reserved for the small enterprises. He refers to 2025 updated limits to reevaluate the company's status. So this is how the case study will be there in your actual exam also. Although the concept which is asked, you are well versed with that concept of MSME revised limits, but via one case study they will be asking you. So let's try to solve some questions based on the case study. While solving such cases, what you have to keep in mind is that what all data points are there. Like here, 8 crore is mentioned, 42 crore is mentioned for the previous year, financial year ending March 2025. Next, when we talk about since July 2025, the additional investment has been there of 15 crore. And ultimately, two numbers are there, two terms are there. One is small enterprise currently, and in future they can move towards the medium category. So these 2-3 terms only you have to remember, nothing much. Now, based on the updated 2025 limits, what is the maximum investment limit for a company to still be classified as small enterprise? So when you talk about the small enterprise, what is the investment limit? Simply, if you know that, then directly you can answer this question. See, whenever there is such type of cases, whenever the case study based question is there, there will be multiple questions which are linked with the case. But you need not to, read each and every question and after that to go to the case study. Directly read the question and directly answer, because sometimes the direct data point has been asked. Like in this first question, maximum investment limit for a company to be classified as small enterprise. So the answer will be what? 10, 25, 50 or 100. Everybody knows for the investment limit it is 25 crore. B is the right answer. And if I ask the turnover limit for the small enterprise, simply multiplied by 4, you will get 100 crore as the turnover limit. Fine. Next question. After Indus Innovations expansion in July 2025, their total investment in plant and machinery became 23 crore. So more or less after the investment in the ultimate expansion, via the expansion, now the investment stands at 23 crore. It means they are still in the small enterprise category. Under the new classification of 2025, which category do they fall into? Just now we have seen 25 crore for the small enterprise. So the right answer will be again what? Small enterprise. That is option B. Okay. So in a way, if you see that even if you do not read all the lines, all the data very carefully in the case study, still you can solve some questions, but it is not valid for all the questions, right? Now, if Indus Innovations turnover reaches 110 crore in 2026, we are talking about turnover, while the investment stays at 23 crore, what will be their new classification? So when we talk about such scenario, where on the one hand you have the investment as the investment limit within the threshold of small enterprise, And on the other hand, you have the turnover beyond the small enterprise. So what will be the right answer? It remains a small enterprise because the investment is under 25 crore. It becomes medium enterprise because now turnover is beyond 100 crore. It remains small enterprise because only one criteria was breached, or it becomes a micro enterprise. A very interesting scenario here, very interesting question. Try to answer this one. It tests your knowledge also, how in depth you know the concept. The right answer for this question is option B. It becomes a medium enterprise because the turnover has now exceeded 100 crore. So always remember, whenever there is a breach of at least one limit also, you will find yourself into that particular category. Not in the small, but now in the medium enterprise category. B will be the right answer here. Under the revised guideline with effect from 1st April 2025, medium enterprise can have a turnover up to what? 250 crore, 400 crore, 500 crore or 1000 crore. Simply, it will be 500 crore. C is the right answer. What is the core logic used in India for MSME classification as per the latest 2025 update? Only investment in the plant and machinery, only annual turnover, composite criteria of investment and turnover, or for that matter, number of employees and total exports. So simply, we will take into consideration what? The composite criteria, right? Investment as well as turnover. But always remember, whenever there is at least one measure like turnover was more than the small enterprise, and it will enter into the medium enterprise, which we have seen in this particular case also. Right? So additional information for all of you. Okay, so I hope that this type of case study everybody can solve, even if it involves some reading initially, but ultimately you will be able to solve it based on the knowledge you already have. Fine. Now let's talk about the limits at strength, at the length. So investment limit 2.5 crore up to 2.5 crore micro enterprise, up to 10 crore turnover limit. Small enterprise investment limit up to 25 crore, turnover limit up to 100 crore. Medium enterprise investment limit is up to 125 crore, turnover limit is up to 500 crore. Now another case for all of you. Try to answer this also. Very interesting case study based on one of the important initiative of MSME sector. So Government of India recognizes that for a nation to achieve sustainable economic growth, it must transition from the culture of job seekers to job givers. To facilitate this, two flagship initiatives were launched. One is Startup India, then we have Stand Up India. The Startup India initiative, launched in 2016, aims to build a strong ecosystem that is conducive to the growth of startups. So we are talking about what? Startup. And a further explanation here, while the initial wave of entrepreneurship was concentrated in the technology center and tier 1 city, Government of India's vision is to permeate the sectors like agriculture, healthcare and education, extending deep into tier 2, tier 3 as well as rural areas also. Now by offering the tax breaks and simplifying the regulatory process, the scheme seeks to capture India's demographic dividend. Right? So that is what the scheme wants to capture, that whatever the job potential we have, earning potential we have, since the age is very conducive for our country, most of the population is in the working age, so let's have the factor from there also. Simultaneously, the Stand Up India scheme addresses social equity in entrepreneurship. It specifically targets underrepresented groups, namely women and the individuals from the scheduled caste and scheduled tribes. Again, when we talk about the Stand Up India scheme, that is the eligibility criteria, right? The focus here is on the greenfield ventures, projects that are being started for the first time, by providing the accessible credit ranging from 10 lakh to 1 crore at subsidized interest rates. So if you are a regular audience of ours and you keep on updating yourself via this YouTube channel, then everything, whatever we have seen in this case study, you already must have known. But nonetheless, that's how the questions are asked. And from here, there will be two types of learning from these sessions. One, whether you have to lay more emphasis on reading each and everything. And secondly, how to solve. So first question here, what is the primary transformation of Startup India initiative? Startup India initiative seeks to achieve regarding the Indian workforce. Regarding the Indian workforce, what is the primary transformation? Turning the rural laborers into urban technology experts, converting the millennials from job seekers to job givers, encouraging government employees to move to the private sector, or transitioning the tier 1 city workers to tier 3 rural industries. The right answer is what? From job seekers, you have to become job givers, right? So B is the right answer here. Then comes, how does the Startup India scheme intend to expand geographically? So when we talk about the geographical expansion of this particular scheme, you will find one aspect which we have just now seen, that the scheme will move from your metro cities, tier 1 cities to gradually rural areas. So the right answer for this question will be what? By spreading from tier 1 cities to tier 2, tier 3 and then to the rural areas. That is the correct answer, option C. Then which of the following is a specific requirement to qualify for the Stand Up India scheme? So Stand Up India, Startup India, two programs are there. Stand Up India more or less talks about what? For the initial investment, or for that matter, you are a fresh businessman or woman. The business must be in technology or software sector. The applicant must have at least 10 years of prior business experience. The business venture must be a greenfield project, a new undertaking, or startup must be located in tier 1 city. What is the right answer here? The simple answer is the fresh project, the greenfield project, new undertaking. Option C is the right answer. Then comes, what is the financial range of the special loans provided under the Stand Up India scheme? So under the Stand Up India scheme, we have a fixed range that is from 10 lakh to 1 crore. C is the right answer here. Okay, so yes, that's how you should remember the Stand Up India, Startup India scheme, all the important points which we have discussed just now. Keep on revising them, and if in case some type of case study is asked, you will be able to answer them based on whatever you have seen in this particular question. Now let's move on to the numerical part. Numerical, it is based on your PSL norms, priority sector lending norms. So MSME sector in India, it had two types of case studies which we have seen. Now numerical is purely based on the PSL norms. So if you directly know the PSL norms, you know the table, the RBI master guideline, then you can answer directly. Otherwise, via this particular numerical, via going through each and every part of this particular numerical, you have to arrive at the answer. So following the RBI's comprehensive review in 2025, 3 banks with different structural profiles are evaluating their lending portfolios for the financial year 25-26. The banks must ensure they meet the specific sub-targets for NCF, that is non-corporate farmers, and small and marginal farmers within their overall agricultural target. So as you know that in 2025, NCF category was introduced, and it stood at what? 14%. Small and marginal farmers, the priority sector lending, it stands at 10% itself. And what is the overall agricultural target? It was the same as earlier, that is 18%. Vikas Grameen Bank, RRB, and here the particular ANBC is mentioned as your, which is focused on the rural credit. It has the ANBC of 2000 crore. Directly it is mentioned. Then we have a global Alpha Bank, which is a foreign bank with 25 branches. That means the foreign bank with more than 20 branches, they have the obligation for the rural credit or the agri credit, right? So this particular bank, Global Alpha Bank, will be having the obligation for the priority sector lending. Operates primarily in metros, but must comply with the same targets as domestic commercial banks due to the branch count. It has an ANBC of 5,000 crore. So ANBC is mentioned as 5,000 crore here. Then we have one small finance bank, Unity Small Finance Bank, a newly transitioned SFB aiming to maintain its high inclusion targets with the ANBC of 1,000 crore. So all these are mentioned. We have one RRB, one foreign bank with more than 20 branches, and then we have the small finance bank. Each of them has a specific A and BC which we will be utilizing for the calculation under this particular numerical. So based on the revised PSL guidelines, what is the combined minimum lending requirement in crores for the small and marginal farmers that Vikas Gramin Bank and Unity Small Finance Bank must collectively achieve for the financial year? So for this question, first thing is you must know that what is the limit, the obligation limit for the small and marginal farmers, that we know, right? It is what, 10% of A and BC. So here the first thing is clear, 10% of A and BC for your Vikas Gramin Bank, 10% of A and BC for your Unity Small Finance Bank. We will have the 10% value here, and then simply we have to add both the values. So for your Vikas Gramin Bank, it is 2000 crore. For your Small Finance Bank, Unity Small Finance Bank, it is 1000 crore. So first we will see 2000 crore, it's 10%, 10 divided by 100. And here for your Unity Small Finance Bank, it is 1000 crore multiplied by again 10%. Fine. So what will be the answer here? We will have 200 crore from here, and from here it will be 100 crore. 200 plus 100, the right answer will be 300 crore. C is the right answer. Okay, a very, you can say, tricky numerical, but easy for those students who already knew this concept. Fine. So apart from this, what you have to remember is in the agriculture, 18%, 18%, 18%, that is the obligation, and 14% of your target goes to the NCF, non-corporate farmers, and 10% to the SMFs. Same for your RRBs as well as SFBs. Plus one more important point for all of you, since we are talking about the UCBs also now, urban cooperative banks, what is the target there? Total priority sector 60%, micro enterprises 7.5%, advances to weaker section it is 12%. Plus when we talk about the housing, that is also important for our examination. So in the housing you will find that the loan limit has revised. It has been revised again in March 2025 only. So centers with population of 50 lakh and above, the loan limit is 50 lakh and the maximum cost, the project cost, can be 63 lakh. Centers with population 10 lakh and below 50 lakh, loan limit stands at 45 lakh. The project cost is 57 lakh. Centers with population below 10 lakh has the loan limit as 35 lakh and the project cost as 44 lakh. Over the top of it, if we talk about the renovation, then in the first category, that is centers with population of 50 lakh and above, loan limit is again 15 lakh. It has been revised, not the same, but the maximum cost, it will remain the same, that is 63 lakh, because the project cost more or less it includes the renovation as well. Then we have the centers with the population 10 lakh to 50 lakh. The loan limit is 12 lakh, and for the population below 10 lakh, it is 10 lakh. Okay, so yes, this was it for today's class. I hope that you were able to understand that how to solve the case studies, how to solve the numericals, which are based on the topic which is there in module A. Often students feel that cases are not being asked from module A. It is not the case. We have seen in November 2025 good number of questions were asked based on the case studies. And yes, numerical simple formulas, if you know the percentages, then these formula based numericals you can easily solve. The case in front of you, it talks about the globalization, the impact on the globalization, and why this is important for us, because ultimately we have seen in the past also that IIBF has asked from the recent events. And when you talk about the import quotas which have been ultimately levied on India by the USA, then this particular topic, the globalization, becomes very, very important for our exam. So let's first do the reading of the case study. Let's try to understand the case, and then we will be doing the questions also based on the same. So by 2024, the US had become India's largest trading partner. With bilateral trade exceeding 130 billion US dollar. However, this relationship faced a severe test in 2025, driven by a desire to reduce its 45.7 billion US dollar trade deficit with India and concerns over the excess manufacturing capacity. The US administration shifted towards protectionist policies. So the protectionist policies, that is the keyword which you should keep in your mind, because you have studied in the unit number 6, the globalization chapter, that how the protectionist policies work. In August 2025, the US implemented a series of aggressive measures. And what were the aggressive measures? A reciprocal tariff was introduced, eventually peaking at a combined 50% on various Indian goods. This included 10% baseline duty, 25% penalty, specifically linked to India's continued purchase of the Russian oil. So penalty was levied, or for that matter, when we talk about the tariff, directly we are talking about tariff here. So in your mind, what all should be there in the back end of your mind? Protectionist policies. What all protectionist policies are there? We have the protectionist policy implemented via the tariffs. Fine. Then some non-tariff barriers are also there. Plus, when we talk about the import quotas, they are also one of the type of protectionist policy. So here directly it is mentioned that we are talking about some penalty. The US launched Section 301 investigations into Indian solar modules and steel, alleging unfair government subsidies also. So subsidies are being questioned. So via which type of protectionist measure we talk about these subsidies? That should be in your mind. This created de facto quotas as uncertainty stifled import volumes. So some quotas are there, import quotas like that. You have to you can say link this particular case with what you have studied till now. The US raised concerns over the forced labor and sanitary standards in Indian textiles and shrimp exports, using these regulations to restrict market access without changing the tax rates. So when we talk about this forced labor or the sanitary standards, or for that matter some plant and animal health regulation standard, all these were also raised. So ultimately the grip was tightened by the US government for the India in case of protectionist policies. So because of that, we have seen that India's textile, leather, jewelry sectors, which rely heavily on the US market, they saw exports plummet by nearly 50%. So the trade relations hampered the overall volume of trade also. Conversely, the pharmaceutical sector remained resilient as it was granted exemptions to protect the US supply of generic drugs. So pharmaceutical sector not having any kind of repercussion whatsoever. Recognizing the total deglobalization would hurt both the economies, the two nations signed an interim trade agreement in February 2026, which I hope that being an aware banker you must be knowing. The US reduced the tariffs to 18%, and in return, India committed to purchasing the 500 billion US dollar in US energy and technology over 5 years, while streamlining its own complex non-tariff barriers. So what is the right answer here? When you talk about for a specific question, what will be the correct answer? We'll be learning that. But what is the right approach? What all you should remember while reading this entire case study? What all protectionist measures are there? Whether you can fit in those protectionist measures here in the case study, what we have studied just now, and what all is asked in the actual question. So based on the case study, which form of protectionism did US use specifically to penalize India's geopolitical stance on Russian oil? So what is the exact form of protectionism? So when we talk about the form of protectionism, you can only tell if you have the desired conceptual clarity. So Russian oil, you can see here, the reciprocal tariff was introduced. So this includes 10% baseline duty and 25% penalty also, which is linked to India's continued purchase of Russian oil. So some penalty has been levied, some tax has been levied on India. So import quotas, sanitary measures, punitive tariffs, or phytosanitary regulations. Here directly you can say that some penalty has been levied by the US government and we call it as punitive tariff. C is the right answer. If no penalty was there, then no kind of tariff would have been there. This penalty is accomplished via the punishment tariff or the punitive tariff. C is the right answer. The US decision to exempt pharmaceutical sector from high tariffs while taxing the textiles at 50% suggests that what will be the correct answer again. So when we talk about such type of question where the exemption is given to one sector and the high tax is not levied on such sector and textile is being levied more than 40%, so 50% as suggested in the case study also. So what kind of decision you can call it? The protectionism is always applied equally in all the sectors. No, you cannot say that. Some sectors will be there who will be exempted, some will not. Then deglobalization is avoided when it threatens essential domestic supply chains like medicine. So more or less when we talk about the deglobalization, it is not avoided when it threatens the essential domestic supply chains. In this particular case, they have not done that. But ultimately, when we talk about some important products like medicinal products are involved, then definitely you will find that some exemptions will be given. Textiles are considered a national security priority for India only. So whether the national security priority for our country is your textiles or not, as per the ultimate case, fine. Always remember while solving the case study, you should be having this thing in mind that as per the case study, whether it is correct or not. Non-tariff barriers are more effective than the tariffs for medicines. So what is the right answer here? Non-tariff barriers more effective. The right answer for this question is option B. Deglobalization, it is avoided. Why? Because pharmaceutical sector is one such sector which will be having what? The repercussions. Fine. Essential domestic supply chain is there and medicine, you cannot compromise on this particular type of product. So B is the right answer. If India restricts the entry of American dairy products citing the standard quality and animal health concerns, which category from the provided diagram does this fall under? So when we talk about the particular diagram, when we say the diagram, it is the particular case 1, 2, 3, which has been mentioned in this particular case study. So what will be the right answer? Tariffs, import quotas, non-tariff barriers, or globalization? So simply when we talk about the American dairy products, standard quality is there, checks is there. So we are talking about sanitary and phytosanitary measures, which are the non-tariff barriers. So C is the right answer here. Then what was the primary goal of India committing to buy $500 billion of US energy and technology in the 2026 agreement? So primary goal was to have what? Ultimate agenda was that lifting of the barriers must be there. So what is the right answer? Increase India's trade surplus, reduce trade tensions, implement new phytosanitary measure, or eliminate use of all the tariffs permanently. The right answer is to reduce the tensions which were there in the Indo-US relationship. A period where countries move away from global integration, increase trade barriers, and focus on domestic manufacturing, as it was seen in 2025 trade war, is best described as what? Hyperglobalization, deglobalization, free trade, or multilateralism. The right answer is option B, again, deglobalization. So integration of economies, you call it globalization. Disintegration of economies, we call it deglobalization. Okay, so protectionism takes three major forms. One is tariff, where you are imposing the tax on the goods which are imported from some another country. Then import quotas are there, where you are limiting the quantity. Quantity is being limited. How? Because ultimately if somebody is asking that yes, 100 units you should import from us, but you are saying that no, we only need 50 units from your country, and based on the trade only, this trade only, the relationship will be established. So import quotas. What is the reason why you are limiting the quantity? To promote the domestic manufacturing and reduce the dependency of your country on imported goods. Third is limiting the quality via the non-tariff barriers. Non-tariff barriers means sanitary, phytosanitary measures and more or less plant and animal health regulation. We are talking about those. Okay, so now let's talk about the next case study, which is a very interesting one. You have to read it very carefully, otherwise you will skip some part or the other. So here, Zenith Innovations Limited, which is a leading tech conglomerate headquartered in Mumbai, India, for the financial year 24-25, the company reported the following financial metrics. We have the net worth as 1200 crore, annual turnover of the company 3500 crore, and net profit is 150 crore. So whenever we talk about such type of data, either it will be for the financial markets or it will be for the CSR, corporate social responsibility, because in order to calculate or in order to decide whether a particular corporate has some obligation of fulfilling the corporate social responsibility or not, you will be judging through net worth, annual turnover and the net profit, either of these three. The board of directors, aiming for aggressive expansion, initially decided to reinvest all the profits back into R&D, neglecting the CSR spend based on the average net profit of the last 3 years. So last 3 years, whatever the CSR obligation was there, they have more or less neglected it. However, the legal department flagged that under the Companies Act 2013, the company is legally obligated to perform the CSR activities. So from here directly you can say that the company is obligated for the CSR activities. The situation despite the warning, Zenith Innovations failed to transfer the unspent CSR amount to a fund which is specified in a schedule. Right? There is a specific schedule under the Companies Act only within the prescribed time limit. Now upon the audit, Ministry of Corporate Affairs (MCA) flagged this non-compliance. Company's CFO argued that since non-compliance is no longer a criminal offense involving imprisonment, they could simply pay a small fine later. Because for a company whose turnover is 3500 crore, the fines are not a big deal, but the image is, right? Now, based on the financial metrics, why is Zenith Innovation Limited required to comply with the CSR provisions? Specifically, it has been asked that what all criterias are there. Right? So if you know the criteria and you know that how we will be linking those criterias here, a very easy question for you. Otherwise, it is a very tricky one. Right? So there are 3 criteria. Just now I told you: net worth, annual turnover, and net profit. So 1200 crore is the net worth, which is again it is ultimately more than the particular limit which has been assigned. 500, 1000 and 5. That's how we ultimately go with the final criteria. So net worth should be greater than or equal to 500, turnover greater than 1000 crore, net profit greater than 5 CR. So 500, 1000 and 5 CR. C is the right answer. All these 3 are met. Okay, because here it is definitely beyond 500, 1200 crore we are talking about. Then we have 3500 there and the limit is 1000 crore. Net profit is way beyond the 5 CR number. So Zenith Innovation Limited is having the obligation of CSR. Which specific schedule of Companies Act 2013 should Zenith Innovations refer to for the list of activities they can legally undertake as CSR? So under the Companies Act, there is a specific schedule as we were discussing, and it is the Schedule 7, right? So B is the right answer. Okay. Then the CFO believes they might face jail time for this lapse. Based on the latest legal developments in penalty regime, is he correct? Whether CFO is right or not in thinking or presuming that they will be having a jail term here. So when you talk about the amendment of 1920, you will find that no longer it is treated as a criminal offense. It is just a civil wrong. So no, the CFO is not correct here. So the provision of imprisonment, it was replaced, and non-compliance is now just a civil wrong. So B is the right answer. If the Ministry of Corporate Affairs imposes a penalty on Zenith Innovations Limited, the company, for non-compliance, what is the maximum financial liability the company faces? Maximum. Fine. So when you talk about the obligation, first you have to calculate that. Fine. So the obligation is what? 2% of your last 3 average net profit, last 3 years average net profit. So this percentage will be calculated first, and based on this we will have the obligated amount. Fine. Okay. So what is the right answer here? Either you pay twice the obligated amount or simply 1 CR, whichever is less. So the right answer is option C. Right? At least 1 crore or twice the amount required to be transferred for the fund, whichever is less. So C is the correct answer. For a defaulting officer of Zenith Innovations, what is the maximum penalty amount prescribed under the current penalty regime? So when you talk about the defaulting officer, what is the penalty? Whether it is at least 1 crore, 1/10 of the amount of the obligation, or 2 lakh, whichever is less, flat fee of 5 lakh, or twice the amount of CSR deficit. So the right answer is 1/10 of the amount. Fine. Obligated amount, or for that matter 2 lakh, whichever is less. Okay, so the right answer is option B. Okay, right. So when we talk about CSR activity, simply what you have to remember, section 135 Companies Act provides the legal support here. Schedule 7 provides for the CSR efforts directions, and the provision that whether a corporate has the obligation or not. Simply you have to see that in the preceding financial year, whether the net worth was more than 500 crore, turnover more than 1000 crore, net profit more than 5 CR. So net worth, turnover and net profit, 500, 1000 and 5 crore. Companies are now having a mandatory 2%, fine, but beyond 2% they can also provide for the CSR obligation in the CSR activities. So 2% of what? 2% of their net profits on CSR in the last 3 years. Then now it is no longer, the CSR non-compliance is no longer a criminal offense. It is simply a civil wrong, and you will be having you won't be having any imprisonment, but you have to provide for the fine. You have to deposit the fine. So what is the fine? What is the penalty? At least 1 crore or 2 times the obligation amount in case of the defaulting company. Okay. Or for that matter, at least 2 lakh or 1/10 of the amount for the each defaulting officer. Right? So that is how we define it. 1 crore or twice for the defaulting company, 2 lakh or 1/10 for the defaulting officer, and in both the scenarios the amount which is less will be charged as the penalty for non-compliance of CSR. First case study in front of all of you, it talks about the law of demand. Let's see that what is the context here. Let's just try to understand the context, and after that we'll be learning that how to solve this particular case study as well. In the diverse Indian economy, the law of demand, which suggests that consumers buy less when the price rises, is frequently challenged by some distinct consumer behavior. So law of demand is what? Whenever the price rises, the demand for a particular good or commodity will fall, and vice versa. But there are certain exceptions to law of demand as well, as stated in the last line. So there are 2 scenarios given in this particular case study. Scenario 1 talks about the iPhone 16. So the Apple iPhone 16 launch in urban hubs like Mumbai, Bangalore. The Apple launched its latest flagship models at significantly higher price point than the previous iterations. So every year you know that Apple keeps on upgrading various chips of their particular chipset of their mobile phone, and ultimately they charge a hefty amount, a hefty sum, which is every time more than the previous model. Despite the price hike, the long queues formed outside the Apple stores. For many young Indian professionals, the device is not just a phone but a symbol of accomplishment. So some kind of accomplishment, something you have accomplished. That is what is the feeling whenever somebody is buying nowadays the iPhone. The high price tag acts as a signal of prestige, social status, leading to an increase in demand despite the higher cost. Just now we have analyzed that in the law of demand, when the price rises, the demand automatically falls. But here it is not happening. In the scenario A, even when the price is high, the demand becomes much more high, right? Thanks to this symbol of accomplishment or the signal of prestige or social status. Next scenario, scenario B. The onions and bajra crisis in rural Rajasthan, a sudden spike in the price of basic staples like onions, bajra, the pearl millet as we call it, created a different anomaly, a different kind of anomaly altogether. Low-income households who spend a large portion of their daily earnings on these essential calories found themselves unable to afford luxury items. So luxury items they cannot afford directly. Why? Because they are struggling with the staple diet itself, the staples to buy those staples which are important for their day-to-day livelihood. So these luxury items which are milk or meat due to the price hike of the staple. Now more struggle is there. Why? Because already they were struggling to meet their daily needs. Now the staple diet's price has also increased, further depleting their resources. And now though they find it very difficult to buy milk or some other products which they can consume. Ironically, to ensure they had enough to eat, they spent their remaining budget on more onions and bajra, as these were still the cheapest sources of calories available. So when we talk about the demand of such staple food items, it will again rise. Why? Because you do not have the sufficient funds to buy some alternate product, some alternate food item, leading to what? More consumption of this staple food. And more consumption means the demand will automatically rise more. Ultimately, we are again witnessing in the scenario B also exception to law of demand, that when the price rises, in fact, it is not decreasing. Ultimately, it is increasing. The demand is increasing with the price rise. So that is scenario B. In both the scenarios, we have the same finding. Now, based on the scenario A, why did the demand for iPhones increase despite the price hike? You know that the price has increased. Ultimately, still, we find that the demand is also high. Why it is happening? So because of the substitution effect. So in case of substitution effect, what happens? I don't have the vegetables to eat, so I will switch to lentils. Fine, I will have the substitute in the picture. But here, no substitute as such, no substitution effect as such is witnessed, because it is perceived as a Veblen good representing social status. Yes, we talk about the Veblen commodities given by Thorsten Veblen. And according to Thorsten Veblen, this type of consumption which people are doing, it falls under the exception to law of demand, where people think that it is a status symbol for the individuals to buy the luxury items, right? So the right answer is option B here. In scenario B, what is happening? The behavior of rural households buying more staples as prices rise is a classic example of what? Law of supply? No, we are not witnessing any supply shortage. Then why we would take the law of supply? No, it is not the correct answer. The law of diminishing marginal utility? No. With every increasing consumption behavior of these staples, the particular customers, the individuals find themselves much more satisfied, right? Because they can only afford this type of staple diet now. The Giffen paradox. Yes, when we talk about Sir Robert Giffen, he was the one who gave us the idea of your Giffen commodities, Giffen goods, that whenever the price rises of the staple commodities of these not so luxurious items, the inferior goods as we call them as compared to the luxurious items, you will find that the law of demand will not hold, ultimately leading to what? More demand even if the prices are rising. Why? Because these are required for your basic survival. These goods, like in Ireland, where Robert Giffen gave this particular theory, he was from Ireland only. Back then, when the theory was given by him, we saw huge supply of your potatoes, even if the price has risen. So more price should have it ultimately should have curbed the prices of your potatoes, fine, because the demand should have been lower. But ultimately what happened? People started to consume more potatoes. Why? Because that was the staple diet in Ireland. Okay, the right answer for this question is option C, the Giffen paradox. Which of the following best describes conspicuous consumption as mentioned in the case study? So what is this conspicuous? It simply means noticeable. You can notice such type of consumption pattern. And when you talk about the conspicuous consumption, it was given by Thorstein Veblen. So we are directly referring to the Veblen commodities here. So buying the goods secretly to avoid the taxes, nothing of that sort is happening here in the case study. Buying the goods specifically because their high price displays wealth, it can be a correct answer. Buying goods only when they are on discount, no discount as such in the example of Apple iPhone. Buying the goods that are necessary for basic survival, these are for the Giffen goods. So the right answer is option B only. Buying goods specifically because the high price displays your wealth. According to the income effect, why would a petrol hike normally reduce the demand? So when you talk about law of demand, there you will find that two types of effect are there, because of which the principle that more price will make the quantity demanded low will hold. So law of demand, first is the reason, the substitution effect. Second is your income effect. And in case of petrol hike, you will find that this particular income effect will be holding. Why? That is the particular question which you have to answer. It makes the consumer feel richer, reduces the consumer's real income or the purchasing power. It makes consumer want to travel more, or it has no impact on the budget of a household. See, when you talk about the price rise for petrol, you will find that people will start using the cabs, or for that matter carpooling, they will do that. They will start using your metros, buses, the public transport like that, so that the income, ultimate income, household income stays intact. And the income stays intact how? When your saving is of the similar level as was the case before the petrol price hike. Okay, the right answer is your option B. It reduces the consumer's real income or the purchasing power. Fine. You will find that my income has reduced by rupees 100 when the petrol price hike is there. Then as compared to the previous month, supposedly it is increased, it has increased from 200 to 300 for any country, and ultimately you have to shell out more money to buy the petrol. So you will feel that yes, my real income has depleted, my purchasing power has depleted by this price hike, the level of price hike, like the example says 100. Now, if the Indian government wanted to stabilize the situation in scenario B, which was the staple scenario, what would be the most effective economic move? So the economic move by the government will be what? Increasing the price of the staple further. You are further increasing the price of the staple. Providing the subsidies or cheaper alternatives to lower the financial burden on the poor. So on the poor, if you are trying to provide more subsidies, or for that matter cheaper alternatives, then definitely it will help. You can consider this particular option. Banning the sale of luxury items, no, it won't hamper any kind of consumption pattern when you talk about scenario B, where you are spending only for your survival. Increasing the luxury items prices in urban areas, again no effect on the scenario B population, right? The right answer stays as option B. Providing the subsidies, cheaper alternatives to the lower to lower the financial burden on the poor. That is what should be done by the government. Okay, so law of demand, just now we have seen one entire case study based on this law of demand only. When the price rises, the demand falls. That is what we mean by the law of demand, governed by two effects, substitution and income effect. Then we have exceptions to the law of demand, the conspicuous consumption, the noticeable consumption as we call it. It is directly linked to the Veblen commodities. And when you talk about Veblen commodities, it is for the luxurious items like luxury bags, the iPhone, Ferrari, supercars, like that. Giffen goods, it is only for the household items. Now, next case study, when you talk about the measure of money supply. So RBI uses different measures to monitor the total stock of money in the economy. One second. Yes, we have done that. Okay. So the RBI uses different measures to monitor the total stock of money in the economy. These measures labeled as M1 through M4. So we have M1, M2, M3 and M4, wherein the money supply is what? M3. They are classified based on their liquidity, how easily they can be spent, and whether they are considered narrow or broad money. So out of these four, the first two are the narrow money, the last two are the broad money. An economist is analyzing the financial health of a specific region. She gathers the following data from a local banking and post office systems. So what is the data here? Let's see one by one. We have currency with the public as 5,000 in crores we are talking about. Demand deposit with the banks 4,000. Other deposits with RBI 500 crore. Then comes the saving deposits with the post office, that is 1,200 crore. Time deposit, the fixed deposit with the banks, it is 8,000 crore. This is a part of what? M3. Total post office deposit excluding the national savings certificate, it is 2,500 crore. This is a part of M4. So whenever the particular question or the case study talks about the measure of money supply, your mind should work like this only, that what all components are written where, they form the part of which type of measure of money supply. Like the first three, they talk about the M1. Then here, if you add in M1 this saving deposits with the post office, we take the M2. Then in your M1, when we add the demand deposits, demand deposits with the term deposits, you will get the M3. Lastly, when you add the total post office deposits also, then we get the M4. So what is the value of M3 here? Simply you have to calculate the value of M3. So we have the M1 plus your time deposit or the fixed deposit with the bank. So 9 plus 8, 17, 17.5, right? The right answer is option A, 17,500 rupees in crores. Consider the following statements. M1 excludes all the post office deposits, whether it is excludes or not. When we talk about M1, it is not having any kind of post office deposit. That is true. M2 is always greater than M3 in the given data. Whenever we have a data, then M2 will always be greater than M3. You cannot say that, right? Because ultimately M2 has a component, different component, post office. M3 will not be in fact having the post office saving deposits. M3 does not include any post office deposit. Yes. M4 includes components that are less liquid than those in M1. So liquidity will keep on decreasing as you move towards M4. What is the right answer here? The correct answer is option B, 1, 3 and 4. So when we talk about all these components, ultimately all these questions, you will have an idea after doing all these questions, you will arrive at a conclusion that every question is not that simple. And here the analytical question is asked, here the numerical has been asked, and like that only you will find all these questions in our sessions. If 2,000 crore is shifted from currency with public to demand deposits, what will be the impact? So when you talk about the currency with public, it shifts to the demand deposit. When we talk about your M1, it has these three components only: currency with public, demand deposit and other deposits. So even if the particular currency with public shifts towards the demand deposit, it won't hamper the M1, fine, because already these three are the part of M1, right? The right answer will be what? Option A, M1 increases, no. Decreases, no. It will remain unchanged. So C is the right answer. Which statement is the most accurate one? All the components of M2 are included in M3. Answer is no. The post office is not included in M3. post office component. M3 is independent of M1. No, it is directly dependent. M4 includes saving deposits twice. So when you talk about the twice term, so if we talk about the M1 and after that the post office deposits also. M2 includes the component not present in M3. So yes, you can say that the post office is not, the post office component is not there in M3, and the right answer is option D only, right? D is correct. Here C option would have been correct if we talk about the specific deposit which we are talking about, fine. Otherwise though it is wrong only as compared to the option D, because you have to select the most accurate one. M2 is including what? It is having a particular component which is from the post office saving component. But in M3, we don't have any kind of relation with the post office savings. So D is the right answer. M1 is the most liquid measure of money. It excludes the time deposit and the post office deposit. So time deposit is not there, post office deposit also not there, and we will talk about the liquidity. It stands like this only. So the right answer is option A. Both are true and R actually explains A. Okay, so these are the formulas which you have to remember for your exam. M1 is currency with public plus the net demand deposits and your other deposits with the RBI. M3, M2, M1 plus saving deposit with post office. M3, M1 plus time deposit. M4, M3 plus all the deposits in your post office. All the deposits will be included except for Kisan Vikas Patra and your NSC certificate. Okay, and when you talk about the narrow money, M1, M2, narrow money, broad money, M3, M4, the money supply is M3, and the liquidity, the most liquid is M1 and M4 is the least liquid. So as you move towards M4, you will find that a decrease in liquidity will be there. First question in front of you talks about the calculation of GNP. You have to calculate the gross national product. Consider the following economic data for India. It is in crores of INR. Private consumption expenditure C is given as 6 lakh crore. Gross domestic investment I is given as 3 lakh crore. Government expenditure G is given as 2 lakh crore. And then we have exports as 1.5 lakh crore, imports as 1 lakh crore. So from here, what you can decipher, since we have to calculate GNP, so gross national product is simply what? The addition of gross domestic product with the net factor income from abroad. And what is this NFIA? Simply you are adding those components, those production levels to your country which are produced in a foreign land. So just for the example, supposedly somebody is in Dubai and the family of this individual is residing in India. So they will be providing the money to Indian family also, right? So from Dubai, the remittance is coming to India, we'll be adding it. And there will be some Dubai citizens also who are there in India, and they will be remitting the money back to Dubai. So we have to subtract that particular money, or for that matter overall production level. So net factor income from abroad, you add this number from any foreign country and subtract the number from India which is going outward towards the origin country of that particular individual. Fine. So this is how you calculate the gross national product. GDP plus NFIA. What is the formula for GDP then? It is C, that is consumption, the private consumption, plus I, that is your investment, plus G, the government expenditure, plus the X minus M, net exports we call it. Okay. So directly you have to add these three. 6 lakh plus 3 lakh plus 2 lakh, you get 11 lakh crore, right? And here X minus M you have to do, which gives you 50,000. Okay. So 11 lakh plus 50,000. That is what your GDP number will be. So it comes out to be 11.50 lakh. And in this number, you have to add the net factor income from abroad. Simply add 30,000 in 11.5 lakh. You will get what? 11.80 lakh crore is the right answer, right? So the right answer for this question will be option A. Okay. A is correct. Then next question, which is based on GDP, not on the GDP calculation, but the question, the formula here in this question it is based on the GDP numbers. So these formulas are also very, very important, which are mentioned in unit number 14th. So assume the nominal GDP of Indian economy for the fiscal year 24-25 is estimated to be 300 lakh crore. So the nominal GDP, which includes the inflationary levels, it is given to be 300 lakh crore. 300 lakh crore. If the average money supply M3 during the time period is 60 lakh crore. So M3, the money supply ultimately, it is 60 lakh crore. What is the velocity of money for this fiscal year? How quickly the money is changing from you to some other person to the rest of the country. So velocity of money, a very simple formula is there. Nominal GDP divided by the money supply. So simply you will have the right answer here as option B. Okay, 300 lakh divided by 60 lakh. You will get the right answer as what? 5. This is the velocity of money. B is the right answer. So you can see that the velocity of money simply is nominal GDP divided by the money supply. 300 lakh crore divided by 60 lakh crore. You get 5 as the right answer. Then another question where we will use the GDP, right? GDP as one of the component. So nominal GDP is mentioned here in a particular fiscal year, that is 280 lakh crore. Nominal GDP, we have 280 lakh crore. Real GDP for the same period is 250 lakh crore. So when you talk about real GDP, it is 250 lakh crore. What is the GDP price deflator for this fiscal year? So simply GDP price deflator is equal to what? Nominal GDP by real GDP multiplied by 100. You will get the GDP price deflator. Right? And what is this deflator? Ultimately, the concept which we have seen in the classes also, that just imagine a glass is half empty. Okay, so some people will say this glass is half empty, some will say this is half full. Just like that only, you can define inflation in two ways. One, the sustained price rise is there, we call it as inflation, or for that matter, the reversal of this particular phenomena, which is known as deflation. That if in case in the economy there is a deflationary trend ongoing, so we won't say that inflation is there, right? So there, in case of GDP deflator, we calculate the deflationary trend, and via that deflationary trend, we tend to predict that what is the inflation in the economy, right? So what is the right answer here? N by R multiply by 100. So simply 280 divided by 250 multiply by 100. You will get the right answer as 112. Okay, so B or C, whatever you feel like, because both are same. C is the right answer here. GDP price deflator, nominal GDP by real GDP multiply by 100, 280 by 250 multiply by 100, you will get 1.12 as this number, 280 by 250 multiply by 100, you will get 112.00 as the right answer, GDP price deflator. Now next question, we talk about the state government's financial report, which shows the following data. In the revenue receipt, 50,000 crore is there, capital receipt 20,000 crore, total receipt is 75,000 crore. What you have to answer in this question, calculate the drawdown of cash balance for the state government. So when we talk about the cash balance, it is just a component of the receipt, but the previous year's revenue. So how we calculate the entire receipt? Total receipt will be equal to the revenue receipt, the revenue accounts receipt plus capital accounts receipt plus the drawdown from the cash balances from previous year. So your revenue receipt is 50,000, add capital receipt to it, you will get what? This number as 50 plus 20, that is 70,000 crore. Right? You have to calculate this drawdown, and the total receipts are given as 75,000 crore. Okay. So simply this 70,000 will go here, and we will get the drawdown of cash balance as 75,000 minus 70,000, which is 5,000 crore. Okay. The right answer is option A. Fine. So the formula, very, very important for our exam, revenue receipt plus capital receipt plus drawdown of cash balance. Then a question based on net tax revenue. what do we mean by net tax revenue? Ultimately, whatever the government is earning, the revenue which the government is earning, it is denoted by the gross tax revenue. And as per the Finance Commission, you have to set aside from the gross tax revenue some state's share. So state's share will be subtracted from here. Along with that, some money which you will be spending in the upcoming year for the dedicated National Calamity Fund, that also you have to keep aside. Okay. So from gross tax revenue, subtract the state's share minus the natural calamity fund, the contingency fund as we call it, and then you will get the net tax revenue. So NTR in this case will be gross tax revenue minus the NCCD transfer to National Calamity Contingency Fund minus your state's share, that is 10 lakh crore. So simply subtract these numbers. 25 lakh minus 10 lakh, you will get what? 15 lakh. 15 lakh minus 50,000, it comes out to be 14.5 lakh, okay, in crores. So right answer is option B. Fine. So likewise, you can have n number of questions. You can practice n number of questions based on these particular topics. And ultimately, the idea is that you should remember the formulas. If you know the formulas, if you know the implementation of the formulas, fairly easy question. At least they are much easier when we compare them with the questions where interpretation is required. Fine. You need not to interpret. Okay. So yes, that's it for your most of the questions. Now we will be solving one or two more questions based on the deficit concept of union budget. But before that, let me remind you that we are providing the MCQ classes in our paid batches also, and we will be starting with the Power Pack revision batch also soon. So if you are interested in the paid classes, you can directly inquire by calling on the number 0981 981 9247 and enroll as soon as possible, because right now the discounts are ongoing, which you can avail using the discount code Y1003. Fine. Now let's talk about some question based on the deficit concept. So here is the question. Calculate the borrowings by the Indian government if the total expenditure is 100 crore, total revenue is 50 crore, fiscal deficit is 70 crore. So when we talk about fiscal deficit, what is the formula of fiscal deficit? It is total expenditure minus the total revenue. And in this total revenue, what you have to exclude? You have to exclude the borrowings, whatever the borrowings you have done as a country. Then you get the fiscal deficit. So here, what all is given? 70 crore is given as fiscal deficit. Total expenditure is given as 100 crore minus the total revenue of your 50 crore. And ultimately, from this revenue, you have to subtract the borrowings as well. And this is what you have to calculate, the borrowings. So just try to calculate this question, this particular equation. 100 minus 50. 100 minus B. So 100 minus 50 will be 50. And when we talk about this sign, minus will get plus. So we have plus borrowing. So here the borrowing will come out to be what? Borrowing is equal to 70 minus 50, which comes out to be 20 crore. These are the borrowings which you have done. The government has taken from the market. Okay. So B is the right answer here. Fine. So if you know the formula, you know exactly how to implement that. Things are very simple. Otherwise, you will get definitely confused. Okay, so fiscal deficit, the formula stands as total expenditure minus total revenue, exclude the borrowings first. Revenue deficit, simple formula is there. Total revenue expenditure minus total capital revenue receipt. Fine, one second. So when we talk about this particular formula, here you will find that more or less in the revenue deficit, we are only accounting the revenue account. Fine. Only the revenue account is being considered for calculating the deficit. So in the revenue account, how you will be calculating? The revenue expenditure minus the revenue receipt. That is what is the formula of revenue deficit. So total revenue expenditure minus total revenue receipt. Then two more important formulas are there. The most important formula of all these will be your primary deficit, from which question has been asked in May 2025. So primary deficit is what? Simply you are subtracting the interest payments from the fiscal deficit. So they will be giving you this interest payment, that what is the number of interest payment, and you have to calculate fiscal deficit from the data which is given in the form of expenditure, revenue and the borrowing, and finally answer that what is the primary deficit. So always remember, primary deficit minus primary deficit will be fiscal deficit minus your interest payments. And when we talk about effective revenue deficit, from this revenue deficit you simply subtract the grants. Okay, subtract the grants and you will get the effective revenue deficit. Okay. Because grants ultimately you won't be able to recover, they are being given at a subsidized rate. That is why you will be subtracting them from the revenue deficit to get the effective revenue deficit. Right? Which among the following are the recommendations of Narasimham Committee 1 1991? So Narasimham Committee, we should remember two, Narasimham 1 and 2. Two committees are there. One is from 1991, another one from 1998. 91 was the core committee, and whatever the recommendations were made in 91, they were reviewed via the 1998 committee. So here the question states the 91 committee itself. Try to answer this. Establishment of 4-tier hierarchy for the banking structure. Yes, that was the norm, that we will be having State Bank of India and other big banks at the top, and lower level will be having the regional rural banks. Phased reduction of SLR. Yes, the SLR must be reduced, and ultimately it was reduced also to 25%. Phased achievement of 10% CAR. So when you talk about the capital adequacy ratio, it was to be made 9%. That was the target which RBI set. Not 10% as is given here. And the same thing, Narasimham Committee also has not acknowledged. They said that 8% should be the criteria. The achievement should be of 8% CAR. But RBI, as we all know, that some more strict measures were implemented by the Reserve Bank of India, ultimately settling the CAR at 9%. Fine. So this third statement is wrong. 1 and 2 are the correct statements. Correct answer, option A. So Narasimham Committee 1, the 1991 committee as we call it, started off with the first important recommendation that the 4-tier hierarchy must be there. 3 to 4 large banks including SBI will be there at the top, and at the bottom you will have RRBs. Then supervisory functions over the banks and the FIs, financial institutions, will be assigned to a quasi-autonomous body sponsored by RBI. And for this we have the Department of Financial Supervision, and the DFS is DBS, yes, Department of Banking Supervision is there. DFS is in the Ministry of Finance, but yes, DBS was there. And when we talk about the supervision within the RBI only, we have this particular department thanks to the recommendations of Narasimham Committee 1. Phased reduction of SLR, yes, that is also right. Phased achievement of 8%, fine, 8% was there. RBI implemented 9%, and now when we talk about today, the public sector banks have a target of achieving 12% CAR. Abolition of the branch licensing policy. Fine. Again and again you open new branch, reopening of some branch. Then whether you have to take license separately, answer is no. That was recommended by Narasimham Committee. Proper classification of assets and full disclosure of accounts of banks and financial institutions, that should also be done. So when you talk about the prudential norms, the provisioning norms, they are a part of this particular setup. Deregulation of interest rates. Every bank should not have the same ROI rate of interest. They should have different rate of interest for various products which they are offering. Setting up an ARF, Asset Reconstruction Fund, to take over a portion of the stressed asset loan portfolio of the banks. So again, when you talk about the stressed asset loan portfolio, nowadays we have the bad bank, right? Via the NARCL. We have implemented this framework, which was originally recommended by Narasimham Committee 1. Next question. As per the section 4 of RBI Act, the paid up capital of the bank shall be 2 crore, 5 crore, 10 crore or 15 crore. A very simple question. When you talk about section 4, which talks about setting up a bank, the paid up capital should be 5 crore. B is the right answer. As per section 13 of the RBI Act, meeting of central board shall be convened by the governor at least dash times in each year. Every year you have to have how many times the meeting of your central board. The meeting should be twice, 4 times, 6 times or 3 times. So the right answer is 6 times a year. C is correct. Minimum loan size for equipment finance under the CAIIB Make in India Soft Loan Fund for MSMEs, commonly known as CAIIB Smile, is dash. What is the minimum loan size which you can get under CAIIB Smile? 1 crore, 10 lakh, 50 lakh or 25 lakh? Right answer is option B, that is 10 lakh. So what all schemes are there? The CAIIB schemes as we call them. First of all, the most important one is Smile. The full form is also important. CAIIB Make in India Soft Loan Fund for MSMEs. Right? So that is the full form of Smile. Minimum loan size 10 lakh for your equipment financing machinery. Minimum loan size for other things 25 lakh. Then loan tenure up to 10 years including 3-year moratorium. Then we have Smile Equipment Finance, SEF as we call it. Minimum loan amount is 10 lakh here. Loan tenure up to 72 months. Very, very important for the examination. They can directly ask the tenure for the Smile Equipment Finance. Then we have loan under the partnership with OEM, original equipment manufacturer. That is the loan amount here will be up to 1 crore. Loan tenure will be up to 5 years. Working capital, the cash credit as we call it. Loan amount depends upon the financial appraisal, whatever the appraisal is, depending upon the health of your unit. As per the terms and condition of the facility, the tenure will also be decided. Then comes speed and speed plus. These two questions have been asked time and again by the IIBF. That what do we have the loan amount as in case of speed and speed plus. So CAIIB loan for purchase of equipment for enterprises development, that is speed. And what is speed plus? This only loan for purchase of equipment for enterprises development plus. And why the plus sign here? Because of additional finance which you are giving under this scheme. So in speed you will find up to 100% of the machinery cost subject to the maximum of 1 crore, maximum 1 crore for the new to bank customers, the customers who are new to the bank, and up to 2 crore for the existing CAIIB customers. So always remember under speed, maximum loan for the new customers 1 crore, for the old customers, existing customers it is 2 crore. Loan tenure, when we talk about the loan tenure, up to 2 to 5 years including the moratorium up to 3 to 6 months. Okay. Yes, one second. Then we have the speed plus up to 100% of the machinery cost subject to maximum of 2 crore for the new to the bank customer, and for the existing customers it is 3 crore. So 2 crore for the new, 3 crore for the existing ones. That is why we call it as speed plus, because you give additional finance under this particular scheme. Then up to 2 to 5 years, that is the loan tenure, which includes the 3 to 6 months moratorium as well. Then comes TULIP, the top-up loan as we call it, top-up loan for immediate purposes for your various small industries. 30% of the existing exposure that you can give as the top-up, or 20% of the net sales of the firm, whichever you feel is ultimately the benchmark which you should proceed with. And what is the maximum loan here? Maximum top-up can be 2 crore. This is important for the exam. What will be the maximum top-up loan limit in your TULIP scheme? It is 2 crore. Loan tenure up to 5 years including 6 months moratorium. Then we have STAR. What is STAR? CAIIB Term Loan Assistance for Rooftop Solar PV Plants. And the loan amount stands at 10 lakh to 2.5 crore. Loan tenure up to 5 years including 3 to 6 months moratorium. So 3 to 6 month moratorium is there. That is what is there in the solar PV plants loan as well. That is STAR. Very, very important. The moratorium is there or not. Normally we see that questions around moratorium are also asked. Then we have SAFE scheme, CAIIB assistance to facilitate emergency response against coronavirus, and SAFE plus also Twarit. All these 3 schemes, these are the old schemes. Now no longer they are there in the market, But yes, for your examination, they can ask the loan amount under SAFE, or for that matter, SAFE Plus. So what was SAFE? It was said to be assistance to facilitate emergency response against the coronavirus. Up to 50 lakh was the loan amount, and the loan tenure was up to 5 years. For SAFE Plus, the loan amount stands at up to 100 lakh, that is 1 CR, and the loan tenure repayable over 4 months. A very important point to note that only when you are hit by the COVID, then your particular firm, its health will deteriorate, and after that you will be able to have the emergency response, emergency funds under SAFE Plus. Twarit, timely working capital assistance to revitalize the industries in times of coronavirus. Again, the loan amount is important here. Up to 20% of your total outstanding loan, which should be up to 25 crore. That is the amount. Loan tenure up to 4 years, including 1 month moratorium. 1 month moratorium will be there in case of Twarit. So how the questions can be asked? The loan amount, and in the loan tenure specifically try to remember the moratorium. From there questions are expected. Most important one being this one, your 6 months moratorium for tulip, top loan. Okay. Then we have, as per the RBI regulatory framework for microfinance loans directions 2022, a microfinance loan is defined as a collateral free loan given the household having annual household income up to dash. So what is the threshold of household income when we talk about the microfinance loans as per the RBI direction, whether it is 3 lakh, 5 lakh, 5.6 lakh or 4 lakh? The right answer is household income should not exceed 3 lakh. Answer is option A. Then an asset finance company in India is one whose income arising out of the principal business is not less than dash of its total assets and total income. So when you talk about the total assets, total income, what should be the minimum threshold via which you are earning this money? So asset finance company should be able to have the principal business as financing the asset. Simple. So what is the threshold there? So the threshold is 30%, 80%, 60 or 90%. Right answer is what? 60%. C is the right answer. Not less than 60% of its total asset and total income for the asset finance business only. Then price discovery in the financial market is affected by which of the following? So whenever you decide that what will be the shares price, the initial in the IPO, initial public offering, or for that matter, you try to judge the competitors across the market. Then price discovery is the mechanism where you can have all your answers. So price discovery depends upon supply and demand. Yes, that what is the market mechanism? That is also correct. So supply and demand market mechanism we learn parallelly. Attitudes to risk. Yes, how much risk you can take. Volatility of the market, how volatile the market is. Available information out in the open on the website of a particular company. Then you can directly have the final price discovery implemented as well. What is the right answer? All the above. 1, 2, 3, 4 and 5. So D is the right answer. Yes, D is correct. Then for the payment banks, a very important question. Every year they ask one question on payment bank. Which among the following statements are correct with respect to payment banks in India? So these banks can accept deposits of up to 3 lakh per customer. So no, only 2 lakh is the limit. Money received as deposits can be invested in government securities which are eligible for inclusion for your SLR also. Yes, that is right. They are permitted to issue debit cards. Again correct. Not the credit cards. Yes, that is right. Banks, the payment banks cannot lend. They can only have the deposit, accept the deposit, that too up to 2 lakh per customer. So 2, 3 and 4 will be the right answer. Option B is correct. Then as per which section of the Banking Regulation Act 1949, RBI gives license to the banks. So RBI is giving the license to the banks based on section 20, 21, 22 or 24. The most important section of all when we talk about the Banking Regulation Act is section 22, via which the license is given by the RBI. So section 22 is that section through which RBI will give the license to the banks. Very, very important. How much was the minimum deposit of the banks that were nationalized in 1969? So whether it was 25 crore, 50 crore, 100 crore or 200 crore. The right answer, option B, 50 crore. First phase of nationalization, fine, 50 crore. And second phase of nationalization in 1980, you will find that all the banks with the minimum deposit of 200 crore were nationalized. So here you can see nationalization of RBI in 1948, SBI 1955, then LIC 1956. The government nationalized 14 private banks with deposit over 50 crore on 19 July 1969, first phase of your nationalization. Then 6 more banks which were exceeding 200 crore on 16th April 1980. Also, the GIC was incorporated in 1972 and 4 public sector GICs are there. We have National Insurance, Oriental Insurance, then UIIC is also there, United Insurance India Company, and your New India Assurance as well. RRBs, they were set up in 1975. Then which among the following committees recommended the establishment of universal banks? So Narsimham 1, 2, the Hote Committee or Sodhani Committee. So when you talk about the establishment of universal banks, a particular phase of development was there, that yes, the DFIs are doing their job, but now we should focus more on the universal banks. Let them decide, let the DFIs decide whether they want to move towards the core banking, the universal banking or not. And it was recommended by Narsimham Committee to B is the right answer. The Hote and Sodhani Committee, when we talk about these two committees, they were important for the India's financial sector reforms and the capital account liberalization. Right? How the capital account convertibility will be there, that was ultimately the forex market was directly, you can say, studied by the Hote and Sodhani Committee, and the outcome was that partial capital account convertibility will be there in our country. Then another question based on your NABFID, which is DFI only, Development Finance Institution. Which among the following statement is incorrect with respect to National Bank for Financing Infrastructure and Development? So NABFID, when we talk about NABFID, has only the developmental objectives. That is why it is known as DFI. NABFID does not take deposit from general public. Yes, that is correct. Initially, 100% shares in the bank government will be holding, and ultimately, subsequently, it will be reduced to 26%. NABFID was set up as a corporate body, authorized share capital of 1 lakh crore. The right answer, the incorrect statement will be option A, because not only the developmental activities, you are also the ultimate company for ultimate bank for financing or developing the infrastructure as well. Which among the following is the provision mentioned in section 24 of the Banking Regulation Act 1949? So for the Banking Regulation Act, whether we have CRR, SLR, MSF or SDF, the right answer is section 24 of your Banking Regulation Act, SLR, Statutory Liquidity Ratio. Cash reserve ratio, it is under the RBI Act, and which section? Section 42. Then, which among the following was the first DFI, Development Finance Institution, established in India? Everybody knows it is IFC, Industrial Finance Corporation of India. A is the right answer. Dash was the first development financial institution to be listed in the New York Stock Exchange, NYSE, whether it was ICICI, IDBI, NABARD or SFC. So the first DFI among these will be ICICI, Industrial Credit and Investment Corporation of India. A is the right answer. Which among the following microfinance institutions are there which are only for profit? So NBFCs, right? MFIs, which are societies? No. Mutual benefit MFIs? No. NBFC MFIs will be the right answer. Option C is correct. Fine. So not for profit, mutual benefit MFI and for profit. For profit, always remember it is NBFC MFI, microfinance institution. Not for profit, these are either societies or the trusts. Mutual benefit MFIs, these include the state and national cooperatives. That is the prime difference. Cooperatives and mutual benefit, not for profit, societies and trust. And NBFC MFI is for profit. Which among the following are the insurance depositories licensed presently by IRDAI? So the insurance regulator, IRDAI as we call it, it has given license to some of the insurance depositories. Which of the following are those? NSDL Database Management Limited. Yes, we have seen this. Central Insurance Repository. Absolutely right. SHCIL Projects Limited is also there. Then we have CAIIB Insurance Repository Limited. Again, correct. So when you talk about the insurance repositories, all these four have been given license by the IRDAI. So right answer is option D, all of the above. Then which among the following are the features of your e-insurance account? E-insurance account, simply, it has 2 or 3 things which you should remember. So each e-insurance account has a unique account number, and each account holder is granted login ID password to access their e-policies, right? So you will be having one account number. Also, you will be granted one login ID and password so that you can access your e-policies. E-insurance account is offered free of cost to the applicant. So no charge as such is there when you talk about the e-insurance account. An individual who does not have an insurance policy cannot open the e-insurance account. So e-insurance account you can open only when you have the policy, or for that matter you can open even if you don't have any kind of policy. It's just like that, even if you don't have money, you can open the account, the savings bank account. Similarly, in e-insurance account also, if you don't have any insurance policy, still you can open the account. The wrong statement is third one, and the rest 2 are correct. So option A becomes the right answer, 1 and 2 only. The concept of bad bank in India is to have a National Asset Reconstruction Company, NARCL, coupled with the Debt Resolution Company. So the bad bank, we talk about NARCL, and this NARCL is coupled with which company? The Debt Resolution Company. What is the name of that company? Whether it is India Debt Resolution Company Limited, IDRCL, National Bank for Financing the Infrastructure Limited, Infrastructure and Development, NABFID, National Debt Resolution Company Limited, NADRCL, or Asset Management Company of India. What is the right answer? Try to answer the question. The simple IDRCL is the right answer. India Debt Resolution Company Limited. A is correct. Fine. So the debt resolution company's name is IDRCL. Then it is expected that sale of the bad loans to the National Asset Reconstruction Company, NARCL, will be against dash cash, and the balance dash being in the form of security receipt. So you will be having some amount as cash, and the remaining will be in the form of security receipts. Whether the ratio is 15:85, 20:80, 25:75, or 30:70. What is the right answer? So you always remember, in NARCL there will be lesser cash but more in the form of security receipt. So we have 15% of the cash, and the remaining 85 in the form of your SRs, security receipts. Right answer is option A, 15% and 18%. Then section 17 of the RBI Act is related to which among the following? Section 17 directly talks about what? Meetings of the central board, removal of your office, business permitted to be conducted by the RBI, or validity of loan not to be questioned. So whenever we talk about the section 17, one thing comes in our mind, that what all businesses the banks can do, and the businesses which are permitted by the RBI. So the right answer is option C, business permitted to be conducted by the RBI. Section 17 talks about that itself. Then we have provisions related to CRR, cash reserve ratio, are mentioned in which among the following sections of the RBI Act? In the RBI Act, you will find that the CRR provisions have been mentioned, but under which section? So often we see the difference between SLR and CRR with the lens of your legislations. CRR under the RBI Act, SLR under the Banking Regulation Act, right? So RBI Act and the Banking Regulation Act, both are covering, one is covering SLR, another is CRR. What is the section? Right? Let's just focus on the section. RBI Act, section 42, 24, 49 or 56. So always remember, for CRR the section stands at 42. CRR 42 and statutory liquidity ratio, SLR, Banking Regulation Act, section 24. Like that you can remember, 42, 24. Then one question based on the NBFC. Which among the following statements is are correct with respect to the non-banking financial company NBFC deposit taking, or for that matter NBFC D as we call it. So NBFCs are allowed to accept and renew public deposits for minimum period of 12 months, maximum period of 60 months. So 60 months is the maximum period, or for that matter some other time period is there. They cannot accept the deposits repayable on demand. On demand, the particular deposits are not available. Yeah, that is correct. When we say that your NBFCs cannot offer any gifts, any incentives, again, very important point in order to institutionalize the deposit taking NBFC. This was one of the parameter, or any other additional benefit to the depositors. The deposits with NBFC are insured. Now here lies the you can say critique also of the NBFC, that their deposits is not insured. The deposit is not insured in NBFC. So what is the right answer here? Correct answer is option A, 1 and 2 only. Third is wrong. Now, which among the following committee has been constituted to make the recommendations with respect to microfinance institution? So MFI's one pioneer committee is there. What is the name of that committee? Nachiket More Committee, R.N. Malhotra Committee, P.J. Nayak Committee, or Y.H. Malegam Committee. So when you talk about MFIs, one committee, that is Y.H. Malegam Committee, stands out from every other committee, because this was the ultimate committee which recommended that how the MFIs should work in our country. Apart from that, Nachiket More Committee talks about the differentiated banks, like we have the payment banks as well as your small finance banks. Then the R.N. Malhotra Committee talks about the establishment of the insurance regulator, IRDAI. P.J. Nayak Committee talks about the review of the banks boards. So in the Narsimham Committee, we have seen that they have recommended that continuous review of various banks boards must be there, right? And this particular recommendation was implemented by RBI via setting up the P.J. Nayak Committee, right? Review of the bank board. Then India was able to break the curse of Hindu rate of growth during which 5-year plan? So which 5-year plan was that? 5th, 6th, 7th, or 8th? Hindu rate of growth, ultimately meaning that low growth numbers, right? The GDP numbers were not that high. Only during the 5th 5-year plan we saw the growth as 5.5%, and we were able to sustain the number till your 6th 5-year plan as well, right? So yes, what will be the right answer here? The correct answer is option B, 6th 5-year plan. We were able to break the curse of Hindu rate of growth. So 6th plan, one of the most important 5-year plan in our country. So 6th plan starts with 1980 till 1985. You will find this plan's implementation was there. What are the objectives? Objective simple. The strategy established under the Garibi Hatao to combat poverty. So we want to combat the poverty via eliminating or elevating the poverty levels. Family planning was broadened to control the population growth. So family planning must be there, and ultimately this family planning will help you in the population growth. Then we have in curbing the population growth, right? Controlling the population growth, not increasing, controlling. Then it also began with the target group strategy, like rural poor, women, backward classes. They were ultimately given some special emphasis in the plans. Implemented various national programs addressing the specific problems. And the most important one, most of the objectives we were able to achieve, and the growth numbers stand at 5.5%. Which of the following best describes the quaternary sector of the Indian economy, or for that matter any economy? So when you talk about the sectors of economy, primary, secondary and tertiary. In tertiary, we have the quaternary and quinary. Quaternary talks about knowledge. And when we talk about quinary, it talks about the decision making, or also known as the brain behind the economy. Knowledge, or for that matter intellect, will be tested here, or for that matter utilized in the quaternary sector. So quaternary sector considered the knowledge sector, focusing on intellectual aspects and human resources. Yes, that is what is the right answer. First statement is correct. Okay. So A is right. In a broader sense, quaternary and quinary, they are just the tertiary sector subsectors. Right? Subsectors of tertiary sector, we have quaternary and quinary. The knowledge sector is your quaternary sector itself, and it assesses the strength of economy's human resources, intellectual aspect of the economy also, and it includes all those activities which involves knowledge. You have the knowledge, ultimately then you are imparting the knowledge. So first you gain the knowledge, then you impart the knowledge. Like teaching, we have the research and development, R&Ds. It also includes the employees in office buildings, elementary schools, university classrooms, hospitals, physician offices, theaters, accountancy, brokerage business, and banking as well. Banking also falls under the quaternary sector, where you are doing what? You are providing the knowledge, but prior to that you are gaining the same. Which of the following agricultural revolutions is correctly matched with its corresponding field or product? So when we talk about these types of questions, you must be very much sure. There lies no kind of elimination trick via which you can solve such questions. Either you know them or you don't know. So silver revolution for cotton, for silver revolution, it is the right match is eggs. Pink revolution for eggs, again no. For pink revolution we have the prawns, we have the pharma, or for that matter we also have the onions. Right? Onions. Then brown revolution, meat, tomato, again no. We have the leather. Then the non-conventional resources, non-conventional energy resources. Also, we have the cocoa. These are for the brown revolution. Grey revolution, fertilizers. Yes, that is the right answer. D is correct here. Yes, D is right. And when we talk about the question which you should answer me as your homework, it will be that golden revolution is for which product? Golden revolution. And if you already know about the golden revolution, do let me know the golden fiber revolution. Golden fiber revolution. So silver revolution for eggs, silver fiber for cotton, pink pharmaceutical, prawn, onion, brown leather, cocoa, non-conventional energy, red meat, tomato, grey fertilizers. Now comes the question which will test your knowledge, not only based on what you have studied recently, but also the past, right? The past of the Indian economy. Which of the following statements are correct regarding the sectors of economy? So agriculture's share of country's gross income has been declining, while the industrial and services sector's share has been steadily increasing. Whether this is right or not? Yes. So when you talk about the 1950s, you will find till the Green Revolution also, the share of agriculture in the Indian GDP was huge. But now it has been declining gradually, and this share, the decline in the share has been compensated by the services sector. So first statement is right. Gross domestic product, GDP, measures the value of all the total goods and services, the final production in the country. This is also right. The agri and allied sectors contributed approximately 17.8% of India's GDP at current prices during 2019-20. Why this data, old data? Because it pertains to the COVID time. We will be comparing this particular number, 17.8%, which was there actually in 2019-20 with the upcoming era of COVID. So 2020, 21, 22, we will be comparing this number with the production during the COVID time. So this is also right. Then comes the services sector's contribution to India's GVA, gross value added, was 54.7% in financial year 24. So roughly you can say 55% is there, but yes, the exact number is 54.7% when we talk about the services sector's contribution. Fourth is also right. Manufacturing employs roughly 12% of the labor force. So when you talk about the industrial sector, the secondary sector, out of the entire industrial sector, 12% of the labor force which is working in the secondary or the industrial sector, manufacturing is employing 12% of the entire labor force. So fifth is also correct. The right answer is all of the above, right? D is the right answer then. Yes, D is correct. Then we have another question based on the sectors of economy. So which of the following statements are correct regarding the sectors of economy? So the organized sector comprises of manufacturing, enterprise, business, school, hospital and unit registered with the government. So when we talk about such type of questions, you must be very much sure that what is the difference between organized and unorganized sector. So organized sector, definitely it comprises of all the particular activities, all the particular organizations which are registered with the government. So this is correct. Organized sector has higher unemployment than the unorganized sector. So normally when we say that unemployment levels are very high in our economy, we tend to refer the organized sector. But as soon as you compare the organized sector's level of unemployment with the unorganized sector, you will find that unorganized sector has much higher unemployment as compared to the organized sector. That is why this statement is wrong. Informal workers, they are defined as those who work in unorganized firms or families, including the regular workers with security benefit, social security benefit, workers in formal sector who do not get any employment benefit or the social security from their employers. So informal workers, although we say that it includes the workers in the formal sector who do not have the any kind of employment or the social security benefit, but always remember when we discuss or define the informal workers, they are not working in the unorganized firm. They are working in the organized firm only. It's just that right now they are not enjoying the social security benefit. They might be at a position where they are the interns in the company, or for that matter contractual workforce is there. That does not mean that they are working in unorganized firm. They are working in the organized firm only. It's just that right now they are undergoing training. Okay, so third is also wrong. Farming is one of the largest unorganized sector of our economy. Yes, that is correct. Unorganized sector is characterized by small scattered units which are largely not registered with the government. This is also right. So the correct answer is 1, 4 and 5. B is the right answer. B is correct. Then comes your sunrise sector. This particular question you have to answer. And what will be the right answer? The best definition of sunrise sector. Sector that is currently the largest contributor to Indian GDP? No. Sector that has reached the peak and now declining? No. The sector that is in its early stage but shows significant potential for future growth. Yes, C is the right answer. A particular sector which has the potential for the future growth and it has the high degree of innovation along with high level of public awareness also. Right. Talking about the deficit financing. So as you remember in the last class, I have given you one homework pertaining to this question only. Let's just try to solve now. Which among the following is not a method of deficit financing in India? So in India, we have various resources, economic resources are available with us, and pertaining to those resources, we plan our economic, you can say, indicators, ultimately leading to the economic plans. So borrowing from the public and foreign governments, whether we can do it and suffice the deficit financing. When does the deficit occurs? Whenever the expenditure of the government is huge as compared to the revenue. Fine. So for our country, deficit financing can be done using the borrowing from the public, means providing them with the government securities, and in lieu of the government securities, you will get the money, the government will get the funds. Borrowing from foreign governments can also be done. So yes, deficit financing can be done using this method. Borrowing from RBI can also be done, yes. Withdrawing the cash balances held with the RBI. So again, true, when we talk about the cash balances which are there with the RBI, those also you will be able to gather once we are in the deficit financing. Lastly, direct borrowing from the private sector. So always remember, government never borrows directly from the private sector, and neither this particular method is there for the deficit financing. So the right answer, not a method of deficit financing, option D. Okay? D is the right answer. So what all financial resources are there for our economic plans? First is your domestic budget resources, which talks about the taxes. Then second important one is deficit financing, borrowing from public and foreign governments, withdrawing cash balances held with the RBI, and the borrowings from the RBI directly. Lastly, the third important one is the foreign assistance, and we have the foreign assistance thanks to the World Bank, and via the IPRT and ITA we replenish our accounts using the foreign assistance. Now let's talk about the next question. Today's question, the first question for today's class, it would be based on the 5-year plans. So which of the following statements are correct regarding the economic planning and 5-year plans in India? Try to answer the question. When we talk about such type of questions, they have been asked in the previous exam cycle. What is the right answer here? So the plan holiday was observed between 1966-69, yes, during the era of Green Revolution. During the 8th plan, the target growth rate was 5.6%, actual growth rate was 6.7%, a very important 5-year plan when we talk about the 8th 5-year plan, because here only we exceeded the expectations. Fine. Normally what used to happen in our 5-year plans, that whatever we were estimating, we used to land up way below that particular level. But in the 8th plan, thanks to the LPG reforms, we saw an increase in your GDP numbers. So second is also right, first is also correct. 14 banks were nationalized during the 4th plan. Again, it is correct. We were talking about the 1969 era, where the deposits, if you are in your bank, they are beyond 50 crore, then we will be having the nationalization. So as such 14 banks were nationalized. The Planning Commission was a statutory authority. So when we talk about statutory entity, here you should remember that a particular entity is known as statutory only when some statute was formed. But in case of Planning Commission, there was no statute. That is why it is not a statutory entity. It was formed via the executive order. So 4th statement is wrong. There was no specific emphasis on the industrialization in 2nd plan. So 2nd 5-year plan only talks about the industrialization at length. So 5th statement is also wrong. Correct answer 1, 2, 3. A is the right answer. Right. So A is correct. Then comes investment in plant and machinery or equipment should not be more than 25 crore. Annual turnover should not be more than 100 crore. Which of the following manufacturing enterprise is described here? So what is the right answer? When you talk about the MSME classification, everybody knows that we have to remember the 1st April's classification, right? So the revision happened, and ultimately now you have to tell me that which of the following is correct for your manufacturing enterprise. Which manufacturing enterprise has the investment limit as 25 CR, and when we talk about the turnover, not more than 100 crore. So the right answer will be what? For your small enterprises, the investment is 25 crore up to 25 crore limit, and turnover limit is up to 100 crore. So B is the right answer. Then which among the following is correct ratio of minimum investment in plant and machinery or equipment for small enterprises to medium enterprises as per the latest MSME definition of Government of India? So the latest definition talks about investment and turnover, and we have the micro, small and medium enterprises. So these enterprises, micro enterprises, when you talk about them, so investment limit up to 2.5 crore. For small enterprises, it is 25 crore up to 25 crore. Medium, it is 125 crore up to 125 crore. Turnover, it is what, 10 crore. For small, it is up to 100 crore. And the turnover for the medium enterprise is up to 500 crore, right? So small is to medium, you have to tell me the investment ratio. Small is to medium, that is 25 CR divided by 125 CR. So the answer will be what? 1:5. Correct answer is option B. Okay, B is correct. So here you can see that for micro enterprises, the same investment limits for small and medium also. For the turnover also, it is 10, 100 and 500 crore. Now let's talk about the PLI scheme, Production Linked Incentive Scheme, a very important scheme for all of us, because last time they have asked a question on Make in India, and this time chances are there that they will ask from PLI scheme or Bharatmala Pariyojana. Which among the following sectors is included as per the Production Linked Incentive Scheme for MSMEs? So when we talk about the PLI, whether white goods are included, the ACs and the LEDs as we call them, so yes, they are included in the PLI scheme. Food products are also included. In fact, auto components are also there. Medical devices manufacturing is also there, and mobile manufacturing as well. So I think all this, yes, D is the right answer. D is correct. So what all sectors you have to remember? In total, there are 14 sectors. Can you remember all? If you can, then go ahead and do remember. But otherwise, only 6 of them are most important ones. One is this drones and drone components, because this is the latest one which has been added in this list. Then we have ACC battery, advanced chemistry cell battery. Then high efficiency solar PV modules, very, very important. Then we have textile products, be it the man-made fiber segment or for that matter, technical textiles. Then we have the 5th one as white goods, ACs and LEDs. And lastly, you should remember the specialty steel. These 6 you must remember. Fine, I'm not saying that ignore the rest 8, but at least remember these 6. Fine. So we have your mobile manufacturing, critical key starting materials, the drug intermediaries, pharmaceutical ingredients are there. Then manufacturing of medical devices, automobile, auto components. Then we have pharmaceutical drugs also. Okay. So after that, telecom is there, telecom and networking products. Electronic or technological products are also there, as well as your food products. Fine. So when we add all these, they are 14, but these 6 are very, very important. Okay, now let's talk about the CLCSS. Which among the following is the aim of Credit Linked Capital Subsidy Scheme? So CLCSS talks about only one thing, that is technology upgradation, tech up, as we call it in our paid classes also. Right? So the right answer will be what? Providing business opportunities to women and SC/ST individuals? No, it is for the stand up. Right? This is the Stand Up India scheme we are talking about here. Then creating new jobs and reduce unemployment. So there is no talk about any kind of new job offered in the CLCSS scheme. Organizing the traditional industries and artisans into clusters. For this, we have a dedicated scheme, that is Furti, not part of CLCSS. Lastly, upgradation of technology for MSME is absolutely right. D is the correct answer. Then comes the priority sector lending target. So the PSL target with respect to the small and marginal farmers, SMFs, of foreign banks with more than 40 branches in India is what? So PSL target simply stated for the small and marginal farmers. So we have 18% of ANBC or COB, whichever is higher, as the overall target. Fine, this is the overall target, overall agri target. 10% is indeed for the small and marginal farmers. So B is the right answer. What is this 7.5%? 7.5% is for the micro enterprises, right? And 12% for the weaker sections, right? Weaker sections. So you should remember each and every of these particular, you can say, criteria, because ultimately question can be asked from anywhere. The most important this year will be two things. One is agriculture, 18% is the overall target, 14% is earmarked for the NCF category, non-corporate farmers category, 10% is earmarked for your small and marginal farmers. Then comes the next important part, that is small finance banks. So for the overall target of small finance banks, it stands at 60% of ANBC or COB, whichever is higher. Apart from that, in the RRBs, they can ask one question based on the advances to weaker sections, which stands at 15%. Now let's talk about the REITs. The question is from Module D, the last chapter of our entire syllabus. The investors in real estate investment trusts, REITs, have a tax rate of dash for the interest income to non-residential unit holders. What is the right answer here? Tax structure, non-residential unit holders. Right? The non-residential unit holders can be there. Right? So when you talk about the right answer, the correct answer is 5%. Fine. So the tax rate of 5% in case of REITs, the investors in REITs, they have a dedicated tax rate of 5% for the interest income to your non-residential unit holders. So B is the right answer. Here you can see invest in the real estate or infrastructure without actually owning the asset. That is the core agenda of your investment trusts. Benefit from the favorable tax norms, the tax exempt dividend income. Dividend income is tax free. No capital gains tax is there for a particular threshold. If units are held more than 3 years and sold through stock exchange, fine. So more than 3 years, if you are having and you are selling them off via the stock exchanges, then no tax, no capital gains tax. But when we talk about the other scenario, the long-term gains tax, and for that matter, your small-term gain tax or short-term gain tax also, that will apply. Withholding the tax at 5%, 5% for interest income to the non-residential unit holder. So what is the right answer? Option B is correct. Fine. Next question, which of the following statements regarding the regulations for real estate investment trusts, REITs, appears to be correct based on the provided information? So try to answer the question based on the REIT's regulations, right? The sponsor, SPV, who all will be the managers, like that. So sponsor to hold not less than 25% of the total units of the investment trust for at least 3 years from the date of listing. Once you have listed your investment trust, from that date, no less than 25% of stake should be there in the investment trust of your sponsor. SPVs, not less than 80% of the assets directly they should hold in the properties, the physical assets, and not invest in other SPVs. That is absolutely right. You cannot invest as an SPV in the another SPV, right? That you are a domestic company investing in the another domestic company on behalf of the REIT. This setup is not possible. Investment trusts to hold controlling interest and not less than 50% equity share capital or interest in the SPVs. So controlling interest must be there, because ultimately if your investors' money depends upon the assets which are being held by the SPVs, then you must have some control over these SPVs. Investment trusts to invest not less than 80% of the value in completed and revenue generating projects. Fine. So 80% of the projects, wherever 80% of the value wherever you have invested, it should be in those projects which are either complete and they are doing what? Doing good revenue numbers. So the right answer is option D. All of these statements are correct. So if you have not studied yet the RITs, these 4 points you should remember at least. Sponsor, the ultimate part is that 25% of the total units of the investment trusts should be held, by minimum 25%. For the SPVs to hold not less than 80%, and no holding investment should be there in the SPVs, other SPVs. Investment trusts to hold controlling interest and not less than 50% equity share capital. Investment trust to invest not less than 80% of the value in the completed as well as revenue generating projects. Fine. Now let's talk about invite. Here you have to tell me which of the following statements are incorrect regarding the infrastructure investment trust invites based on the following information. So always remember to have a look here. We are talking about incorrect statements. So invite has two types of managers, investment manager and project manager. Yes, that is the prime difference between invite and REITs, right? An invite can have a maximum of 3 sponsors and mandatorily required to hold a minimum of 10% stake in the trust for at least 3 years after the formation of the trust. So a minimum of 10%? No, a minimum of 15% should be held. So second statement is an incorrect statement. The primary responsibility of sponsor is to set up the infrastructure investment trust and appoint a SEBI approved trustee. So infrastructure investment trust, the sponsor here is having 2 major functions. One, to set up this invite, right? And the second one is your appointing the SEBI approved trustee. These are the 2 prime responsibility of the sponsor. So 1 and 3 are the correct statements. You have to tell me the incorrect one. So what is the incorrect one? Second is the incorrect one. Option A will be the right answer. Fine. So like REITs, invites have 3-tier management structure consisting of sponsor, manager and trustee. But here in invites there are 2 types of managers. In the REITs only 1 type of manager is there. For the sponsor, an invite can have maximum of 3 sponsors. They appoint the SEBI approved trustee, and invite sponsors are mandatorily required to hold minimum of 15% stake in the trust for at least 3 years. This number you have to remember, minimum 15% of the stake till the upcoming 3 years after the formation of trust. Which of the following statements are incorrect regarding the Employees Provident Fund Organization EPFO? So it was set up in 1952, covers the employees in specified economic sectors at firms with more than 20 employees. So yes, we are talking about the firms which are having more than 20 employees. So that's a correct statement, right? It is a statutory body under the Ministry of Commerce. No, it is under the Ministry of Labor and Employment. So this is an incorrect statement. The EPFO administers the mandatory provident fund while outsourcing the management of the scheme's assets to fund managers. So it will be outsourcing some type of management of the entire scheme of EPF to the fund managers. The board is chaired by Ministry of Labor and Employment, Government of India, or for that matter, the Board of Trustees we are talking about, right? The Central Board of Trustees. The EPFO's apex decision-making body is Central Board of Trustees. That is also correct. The right answer will be only 2. C is the right answer. Why? Because only this is an incorrect statement. Rest all is correct. All these statements are right. Board is chaired by the ministry. The EPFO's apex decision making will be done by the Central Board of Trustees, which includes what? The government, then you have the employees representatives and employers representatives as well. It was set up in, the EPFO was set up in 1952 and it covers the employees in specified economic sectors. Okay, so C is the right answer. Then comes the universal account number (UAN). Which of the following statements are incorrect regarding the universal account number or the (UAN) as we call it? EPFO introduced (UAN) universal account number, which acts as the umbrella for the multiple member IDs allocated to an individual by different employers, different types of employers we are talking about. So yes, EPFO was introduced. EPFO has introduced your (UAN) number, and what is the criteria here? The criteria is very simple, that we want the confusion between the employee and employer should not be there. Whenever you switch from one particular employer's company to another employer's company, your data should transfer seamlessly. And data for what? For the EPF. So EPFO introduced the (UAN) number, which acts as the umbrella for the multiple member IDs allotted to an individual by different employers. You have to tell me the incorrect statement. (UAN) is a unique 15-digit number assigned to an employee by the EPFO. Again, this is an incorrect statement. Why? Because 12-digit is there for the (UAN). (UAN) enables the linking of 3 EPF accounts, member IDs, allotted to a single member. So when we talk about the EPF accounts, do you think so that multiple IDs will be there? So linking of the member IDs? No. Linking of your ultimate corpus will be there into a single particular (UAN) number. The (UAN) program was launched in October 2014 as part of Pandit Deen Dayal Upadhyay Shram Jayate Karyakram. That is correct. So right answer is option B. 2 and 3 are incorrect. These two statements are incorrect. Rest 2 are the correct statements. Okay, B is the right answer. Now let's move on to the ISLM framework, a very important framework. Every year they ask question from here. If the Indian government increases the spending on infrastructure projects, which of the following is most likely to occur? So Indian government is increasing the spending. It means what? Basically, the infrastructure projects are witnessing huge influx of money. Right? So government is following which kind of fiscal policy? The expansionary fiscal policy. And whenever expansionary fiscal policy is there, we have the IS curve shifting towards right. And once the IS curve shifts towards right, what happens? You will find that the output increases thanks to the ultimate influx of money. Along with that, the rate of interest will also become high. Okay. So this is what will happen whenever the government increases its spending on the infrastructure projects. What is the right answer here? The IS curve will shift towards left. No, it will shift towards right. LM curve? No, LM curve shifts in the monetary policy transmissions. This is also wrong. LM curve again wrong. IS curve will shift towards right, leading to higher interest rates and higher output. C is the right answer. Simple. Then when you talk about the fiscal expansion, here you can see for yourself, whenever the funds are supplied, national output will increase. The output moves from Y1 to Y2, and the IS curve will shift from IS1 to IS2 now. And when the shift happens, this equilibrium point E1 will also move from E1 to E2. This is the new equilibrium point where the new IS curve and LM curve will intersect. And here you can see earlier the interest rate was I1. Now the new intersection point at the new equilibrium point, you will find the rate of interest is higher. So the rate of interest has increased with the increased national output. So that is the reason why we see that rate of interest is also high with the increased GDP numbers or the output. Okay. Dash are the two primary assets preferred by the consumers under the liquidity theory of interest provided by J.M. Keynes. So J.M. Keynes has provided the liquidity preference theory, and there you will find that two primary assets are there. What are those primary assets? One is cash, another is bonds. So C is the right answer. Okay, two asset economy, we have cash and bonds. But right now, This was in what, 1939, 1940s era. But right now, when we talk about 2026, we are in the 3-asset economy. What is the third asset? So one is your cash, then we have the bonds, same. Third one is the stocks, the share market as we call it. Then which of the following is not a characteristic of business cycle? So business cycle is non-pervasive in effect? No, it is pervasive in effect. So first option itself is a right answer because not a characteristic has been asked. Pervasive means what? That it spreads. The effect of business cycle will spread. It penetrates across the industries. Then in which phases of business cycle the following characteristics are observed? Extremely low aggregate demand in the economy causes the activity to slow down. So when we talk about extremely low aggregate demand, it happens only in one phase. Which phase we are talking about? The depression phase. Right? After recession, you have the depression phase, and that is the correct, you can say, phase. Here you can see, select the most appropriate: recession, depression, stagnation, or recovery. The right answer is depression only, right? Because this extremely low aggregate demand is witnessed only in the depression phase. Also, inflation is comparatively low. You will find low inflation as compared to the recession phase. Employment avenues, they begin to close, forcing the unemployment rate to rise rapidly. Right? Unemployment rate will rise rapidly because no employment is there. Right answer is option B, depression phase. Fine. So yes, these were some set of questions. We'll be learning some more questions in the upcoming 10 minutes. But before that, let me just remind you that we have launched our Power Pack revision batch. The classes will be starting from tomorrow, 6 a.m. sharp for the IE and IFS. So if you want to enroll in this course, directly visit our website www.ada247.com and download also our official app, that is ADA247. Both are the medium from where you can directly enroll in our courses, right? The Power Pack revision batch. If you want that in the final week, you want all those important topics covered via MCQs, then definitely you should consider enrolling in this particular batch. And there is one special discount code for all of you, which is Y1003. Directly apply this discount code and you will find maximum discounts. For more details, you can also call us on the number 0981 981 9247. Now let's talk about the tenors of the term repos. So the tenors of term repos conducted by RBI under the targeted long-term repo operation, TLTRO, were between what? So the targeted LTROs was for what? Ultimately, LTRO started off as the 1 lakh crore infusion of money for the banks. Fine. RBI provided this much amount to the banks so that banks will transmit the benefit of lower repo rate to the customers. Right. 1 lakh crore divided into 4 equal tranche of 25,000 crore. Right. And when we talk about the targeted long-term repo operation, so we targeted, the RBI ultimately targeted some type of enterprises like corporates. Right? Corporates were given money. Like we have the NBFCs, they were given some money. Right? So the long-term repo rate is simple one for all. For some targeted sectors, you will be having the TLTRO. And directly the banks will be supplying this particular fund. But one more special LTRO is there. Special SLTRO. And what is this SLTRO? Simply a specific bank, special bank was given money and the bank was given the instruction that you should pay this money, you should provide this money for some specific segment. So what type of bank we are talking about? Small finance banks. And these small finance banks were directed to give the money to the MSME sector. So these are the point of differences between LTRO, TLTRO and SLTRO. So for a TLTRO, what was the tenor? It was 1 year and 3 years. A is the right answer. For LTRO, 1 year and 3 years. Okay. Next question based on the CRR and SLR. According to the regulations set by the RBI, which of the following statements regarding the maximum and minimum limits of your CRR, cash reserve ratio, and SLR, statutory liquidity ratio, is correct? Try to answer this question. Ultimately, such questions will be there in the exam also, wherein you have to, relate two or more concepts which you have already studied. So in one question, in single question, you will find multiple concepts which will be tested. So when you talk about the CRR and SLR, what is the right answer here? Simple. The CRR is mentioned in the RBI Act, and in the RBI Act you won't find any minimum limit or, for that matter, maximum limit for your CRR. No minimum or maximum limit is prescribed in the RBI Act. Then SLR, we have the Banking Regulation Act. In the Banking Regulation Act also, you will find that no minimum limit is prescribed, but 40% is prescribed as the maximum limit. Okay. So what is the right answer? The correct answer is option B. CRR has no legally defined maximum or minimum limit. SLR has a legally defined maximum limit which stands at 40%, but no statutory minimum limit is there. And right now, when you talk about CRR, it is 3% in our country. SLR is your 18%. Right? Next, which among the following sections of the RBI Act consists of provisions with respect to accountability of RBI with respect to your inflation targets? So when you talk about the inflation targets, section 45 ZB, 42 ZN or 49. So inflation target accountability will be set for your section 45 ZN. C is the right answer. Then which of the following is not a direct component used in the calculation of the MCLR, marginal cost of funds based lending rate? Whether it is your marginal cost of funds, negative carry on CRR, operating cost, or external benchmark rate. So the right answer for this question will be option D. External benchmark rate is having EBLR. Fine. EBLR is ultimately this external benchmark rate, which is not directly related to MCLR. Both are doing the same function, but you won't say that EBLR is a component of MCLR, right? MCLR has marginal cost of funds as one component, negative carry on CRR, operating cost, and tenor premium. Right? Tenor premium is also one of the components, but external benchmark rate, no, it's not a component of MCLR. Another question based on CRR and SLR. Which of the following statements accurately distinguishes between cash reserve ratio and statutory liquidity ratio? Try to answer this question as well. So CRR is maintained by the banks in the form of government securities? No, in the form of cash and cash equivalents. So this is wrong. CRR primarily aims to ensure bank solvency. SLR aims to control the money supply. It is the reverse. Money supply is ensured via the CRR, and solvency, the credit potential of a country, will be determined by the SLR reserves. This is also wrong. CRR is the percentage of banks deposit held with the RBI. SLR is the percentage of bank deposit held in liquid assets like government securities, right? CRR is used to manage long-term liquidity. SLR is used to manage short-term liquidity. So liquidity we are talking about, or for that matter, we have C as the right answer. You have to give me the statement which is most accurate. A very interesting question. Right answer is option C only. CRR is indeed the percentage of banks deposit held with RBI. See, CRR is not here to manage the long-term liquidity, or for that matter, SLR is used to manage the short-term liquidity. They have their own rules. Right? We are talking about the money supply here, right? For the CRR. For the SLR, we talk about the credit supply. Credit means loan supply. Fine. So that is why D is wrong. C is the right answer. That is the most accurate statement of all. Fine. Now let's talk about the GNP, Gross National Product. Consider the following economic data. You have to calculate the GNP. The GNP formula is simple. GNP is equal to what? GDP plus net factor income from abroad. Fine. So GDP has four major components: C plus I plus G plus net exports, that is X minus N. Net factor income from abroad, simply whatever the funds we are receiving from Indian citizen who is residing in Dubai, they are sending the funds to India. We will be adding those and subtracting the funds which are being sent by the Dubai citizens in India to the origin country of theirs. So this particular influx and outflow of remittance will be factored in if you have to calculate national product, right? Gross national product, not only the GDP. Okay, so you have to add NFI here. So here C, that is your private consumption, is 5 lakh crore. Domestic investment is 2.5 lakh crore. Government expenditure is 1.5 lakh crore. So simply you have to add these three. 2.5 plus 1.5 will be 4 lakh. Add 4 lakh in 5 lakh, you will get 9 lakh crore. Here, X minus M, export minus import. So 1 lakh minus 1.2 lakh crore. You will get minus 20,000 crore. And ultimately you have to add all these. So 9 lakh crore plus minus of your 20,000 crore plus 20,000 crore net factor income from abroad. These two will cancel out and you will get the right answer as 9 lakh crore. D is the right answer. Okay. So yes, this was it for today's class. I hope that you will remember, you will revise all these formulas, because in the past we have seen specifically when you talk about module B, there are 3 important chapters from where formula based questions are asked time and again. Unit number 14, which talks about measure of money supply and measure of inflation. Unit number 17, not unit number 17, let me just erase it. Unit number 18. Unit number 18, which talks about the GDP concepts, GNP concepts. We also talk about the market price, base price, all these factor cost, should remember NNP. These are very, very important. Then comes the 19th unit, union budget, wherein you will find the formula based question based on the deficit, fiscal deficit, primary deficit, revenue deficit, and the question from the components of budget. Find what is the formula for net tax revenue, how the gross tax revenue is calculated, and ultimately how an NTR is related to your GTR, like that. Okay, so such formulas, do not forget to revise again and again. And with this we conclude the most expected questions series. And when you talk about the particular series, all the 4 parts are very, very important. So if you have not gone through the previous 3, kindly do that. And if you have any doubt, leave in the comment section. See you guys in the next session.